YTL Cement is a building materials group with the aspiration to contribute to the development of the nation's construction landscape. With integrated cement plants and grinding stations throughout Peninsular Malaysia and multiple loading points strategically located, we are able to serve our customers anytime, anywhere. At YTL Cement, our customers are at the center of our business, where we want to grow together. We have an extensive portfolio of products in bag and bulk for different construction purposes, ranging from general purpose cement to specialized cement for highly technical projects. Backed by strong technical support and research and development capabilities to ensure that we deliver products and services that meet our customers' needs. Our Construction Development Lab and Technical Center are ISO 17025 certified, and our technical service team is always at hand to provide on-site testing and after-sales service to our customers. At YTL Cement, we strongly believe in building and progressing together with our partners. Technical seminars, dialogues and workshops are held for knowledge sharing to understand latest construction trends and offerings. Over the decades, we have had the privilege to participate in the construction of many homes, buildings and infrastructure that make up the construction landscape of this nation. This is only made possible with your support. We look forward to the future, to building together.
Assalamualaikum and hi, my name is Muhammad Akil Muizzuddin bin Abdul Majid and I am one of the account executive at YTL Corporation Sdn Berhad.
Assalamualaikum, my name is Muhammad Akmal Arif bin Muhammad Fauzi. I am one of the account executive of YTL Corporation Sdn Berhad.
Hi, I'm Nur Fazana binti Azham Shah, one of the accountant executive of YTL Corporation Berhad.
Assalamualaikum warahmatullahi wabarakatuh. Hi, I am Muhammad Hazim bin Muhammad Sarafi, one of the account executive in the YTL Corporation Berhad.
Assalamualaikum. Hello, my name is Muhammad Farid bin Muhammad Fuad. I am one of the accounting executive at YTL Corporation Berhad.
First of all, we start with FAR570 segmental reporting. Firstly, we must know the background of the YTL Corporation Berhad. YTL Corporation Berhad is a Malaysia domicile integrated infrastructure developer with international operation, investment and projects under development around the world. A combined market capitalization of approximately 18.5 billion was held by YTL Corp along with its listed company in Malaysia such YTL Power International Berhad, YTL Hospitality REIT, Malayan Cement Berhad and formerly known as Lafarge Malaysia Berhad. The YTL Group is committed to providing world-class products and service at competitive price. Over the past 30 years, the YTL Group has been able to grow its customer base to more than 12 million customers worldwide because of this corporate philosophy. There are three of management approach. First, factor to consider having a segment reporting. Second, type of segment. And third, shift of decision making and its responsibility. Let's talk about the factors of having a segment report. First and foremost, the nature of products and service for each segment. To the extent that the higher level segment information is presented component that contain dissimilar business activities, while the lower level components contain similar business activities. The lower level component may be more representative of the company's operating segments. Secondly, the assistance of chief of decision making in charge for each segment. It is likely that those components that have individual responsible for the company's result, such as a segment manager, business unit CFO or vice president, and who are directly accountable to and maintain regular contact with the chief of decision making to discuss operating activities, financial result, forecast or plan for the segment, the entity's operating segments. Segment manager may be responsible for more than one operating segment. Lastly, the information provided for the board of directors. The information provided for the company board of directors, when not considered to be chief of decision making, may indicate the level at which overall performance is assessed and decisions are made about resource allocation to different areas of an entity business. There are 6 types of segment in this company. First, property investment and development. Second, management service and others. Third, hotel operation. Fourth, utilities. Fifth, construction. And lastly, cement and building material industry. Next, we move to chief of decision making and its responsibility. First, we have Dato' Seri Michael Yoh Sok Hisham. He was responsible in YTL E-Solution Berhad and also YTL Cement Berhad. Next, we have Dato' Yoh Siok Hong. He was an executive director in YTL Power International Berhad and also YTL Communications in Berhad. Next, we have Dato' Yoh Su Kang. She is responsible in YTL Power International Berhad and also YTL E-Solution Berhad and YTL Cement Berhad. Next, Dato' Mah Yok Siok Kah. He was responsible in decision making at YTL Hospitality REIT and YTL Hotel and Properties in Berhad. Lastly, we have Tan Sri Sir Francis Yok Sok Piang. He is responsible in YTL Cement Berhad and also YTL Hospitality REIT in Berhad. Next, we move to next presenter.
So now we are going to look at the process of how to determine the reportable segments. There are 3 methods of how to identify a reportable segment. The first method is using the revenue, where a segment's revenue of external and internal is more than 10% of the combined revenue of all operations. The second method is result and profit, where the profit or loss of a segment is more than 10% of the total profit making or loss making segment. The last one is using assets. Asset of a segment is more than 10% of combined asset of all operating segments, and that will be considered as reportable segment. We are using result and profit method to identify the reportable segment, as can be seen on the table given. Utilities, cement and building materials industry, property investment and development, and management services and others pass the 10% test. Therefore, they are reportable segments. As for construction and hotel operation, they are non-reportable segments because the test resulted under 10% for each of them. Next, I will continue to talk about the 75% test rule. An entity also required to do the 75% total revenue test. It is when combined external revenue of identified operating segments must be more than 75% of the total revenue of the company. The table given shows the revenue, inter-segment revenue, and external revenue for each of the segments. External revenue of only the reportable segment must be added up and divided by total revenue. As for YTL Corporation Berhad, they met the requirement of the 75% test with the result of 90.6%. This is adjusted segmental report after the adjustment. As for the conclusion, I will talk about the advantage and disadvantage of segmental reporting. Let's start with advantage of segmental reporting. Firstly, segmental reporting makes it easily identify the profit-making and loss-making segments. It aids the company in making better decisions. For example, by referring to segment result, the company can decide whether to expand or sell the segment. Next, segmental reporting will make the financial statement can be understood easily. Therefore, we get to see the company's performance clearly. Moving on to the disadvantage of segmental reporting. Firstly, there might be data manipulation because the information is reported in the true management eye style. This gives company leaders more discretion in how it determines and how segments are constructed and what metrics are reported. For example, could be grouped with an unrelated profitable business unit to paint a better picture of performance. Last but not least, it consuming more time as there are many of the closures required in the case of segmental reporting. The data presented in the report might be misinterpreted by the investors and creditors in the company and will lead to misunderstanding.
For the next topic is interim reporting MFRS 134. So, I would like to explain the basis of preparation of interim report for YTL Corporation Sdn Bhd. MFRS 134 prescribe the minimum content, including disclosure, and identify the recognition and measurement principle that should be applied in interim financial report. Then, paragraph 9.22 of Bursa Malaysia required all entities whose debt or equity securities are publicly traded to publish interim financial report. The interim financial report can be complete set of financial statement as prescribed in MFRS 101 or condensed set of financial statement. Next, the interim financial report can be issued semi-annually, quarterly, or bi-monthly. The interim financial report has been prepared on historical and consolidated basis. Last but not least, the condensed consolidated financial statement are unaudited referring to MFRS 134. Condensed set of financial statement, it should be include at the minimum the following component, which is condensed statement of financial position, condensed statement of profit or loss and other comprehensive income, condensed statement of change in equity, condensed statement of cash flow, and lastly, selected explanatory. Identify any two accounting policies used in preparing interim report. The first one is MFRS 116 Property, Plant and Equipment. The property, plant and equipment of YTL Corporation are being measured at a cost model, which is the cost less accumulated impairment loss. The depreciation method used is straight line basis at rates required to write off the cost of the property, plant and equipment over their estimate useful life. Below are the rates. For the building is 1 to 10%, leasehold land 1 to 3%, infrastructure and site facilities 0.9 to 20%, plant and machinery 4 to 20%, telecommunication equipment 4 to 20%, and lastly, furniture, features and equipment 10 to 50%. Next is MFRS 123 borrowing costs. The borrowing costs include interest and other costs incurred by the group and company in connection with the borrowing of fund. It should be capitalized as part of the cost of a qualifying asset if they are directly attributable to the construction or production of that assets until the assets are subsequently ready sell. And it should be wiped off all other borrowing costs are recognized expenses in income statement and in the period which they are incurred.
Next, we will move on to the current and comparative of each statement prepared by the company. The financial statements are prepared based on the quarterly interim report. The financial reports shall be measured from 1st April 2022 to 3rd June 2022, which is equivalent to the fourth quarter for the financial year 2022. Okay, now let's begin with the first financial statement in the quarterly interim report, which is the statement of financial position. For the current interim, the reporting period is 3 months and it will start from 1st April 2022 until 30th June 2022. For the comparative end of the year report, the reporting period is 12 months and will begin from 1st July 2021 until 30 June 2022. Next, I will pass the presentation to the next presenter.
Next, we are going to look at the income statement and other comprehensive income. The current interim has reporting period of 3 months and reporting date starts at 1st April 2022 until 30 June 2022. Next, cumulative year-to-date has reporting period of 12 months and reporting date starts at 1st July 2021 until 30 June 2022. For the comparative current interim has reporting period of 3 months and reporting date starts at 1st April 2021 until 30 June 2021. And lastly, comparative year of date has reporting period of 12 months and reporting date starts at 1st July 2020 until 30 June 2021. The third statement is statement of change in equity. The cumulative year to date has reporting period of 12 months and reporting date starts at 1st July 2021 until 30 June 2022. And comparative year to date has reporting period of 12 months also, and reporting date starts at 1st July 2022 until 30 June 2021. The last one is statement of cash flow. The cumulative year to date has reporting period of 12 months and reporting date starts at 1st July 2021 until 30 June 2022. And the comparative year to date has reporting period of 12 months and reporting date starts at 1st July 2022 until 30 June 2021. There are adjustments made by the company to be included in the interim report, which are additional asset and sales and leaseback. We would like to suggest YTL Corporation Berhad acquire new equipment through issuance of share capital. This is because it will increase efficiency and production as well as generate significant cost savings, and it would also not involve cash outflow and bank loan. On 1st April 2022, YTL Corporation Berhad purchased 3 new equipments amount to RM3 million by issuing new ordinary shares. The useful life of the new equipments are 5 years. It is the policy of the company to depreciate non-current asset using the straight line method on a monthly basis. So this is the journal entry. So first, we debit new equipments by 3 million and credit ordinary share by 3 million. We will also debit SOPL by 150,000 ringgit and credit accumulated depreciation by 150,000 ringgit. So as at 30 June 2022, the carrying amount of the new equipment is at 2,850,000 ringgit. The following is an abstract of 4th quarter statement of financial position as at 30 June 2022 before adjustment was made and after adjustment was made.
Thank you, Akmal. The second adjustment is sale and leaseback. The company entered into a sale and leaseback agreement to obtain cash and asset can still be used to carry out its business. For sale and leaseback, on 30 June 2022, YTL Corporation Berhad or YTL entered into a sale and leaseback agreement with Berjaya Berhad for one of its plants at their fair value of 2 million ringgit. The plant was purchased by YTL on 1st July 2021 at a cost of 2,500,000. YTL agreed to pay 4 equal annual installment of 7,000 ringgit starting from 30 June 2022. The interest rate implicit in the lease agreement is 10%. The useful life of the plan is 5 years. YTL Corporation Berhad shall recognize the proceeds on sale and account the leaseback as financial liability. The annual rental payment by YTL Corporation Berhad is a payment of financial liability on the use of the asset. No interest would be charged on 31 June 2022. The lease term is 4 years and the remaining useful life of plan is also 4 years. So, YTL Corporation Berhad has control over the plan. The transfer is not a sale transaction. As shown in the slide, journal entries record the significant adjustment as soon as the corporation entered a sale and leaseback with Berjaya Berhad. The bank account has increased of 2 million ringgit as the company received cash from the Berjaya Berhad to finance this project. The financial liability is decreased of 7,000 ringgit. This adjustment can also benefit the company as it can increase the profit of the company as there is a gain on sale of the building. This table shows the express statement of financial position for the 4th quarter as at 30 June 2022 to show the effect of after and before the adjustment. As we can see, in current assets, cash and bank balance has increased of 1,300 ringgit. For non-current liabilities also shown has increased in long-term payables and other contract liabilities after adjustment of 1,300 ringgit. I think that's all presentation from us. Thank you and have a nice day.